And it's full send time for the economy to start going gangbusters. And what does that mean? You need to give credit. That is what the US economy is based on. It's credit. And so that is supplemental leverage ratio. That's treasury buybacks. That's ending the conservatorship of Fannie and Freddie. There's all these sorts of things that they can do to increase the credit into the system to start juicing at least financial markets to start with. Maybe there's a recession, maybe there's not. I don't really care. It doesn't matter. I just know the money needs to be printed. The markets need to go up because the party in power is getting reelected. In the same way that the Democrats did the same thing with, Fed cut rates for Kamala Harris. Unfortunately for them, she lost, but it's the same playbook at the end of the day. That playbook really starts in earnest in the fall. And so that's why I think that's when we get the real juicy, just like day after day of just green candles everywhere across the crypto ecosystem. I think we can go, we go through 110,000 and then so we sort of run until in the $150,000 to $200,000 range. I think that could happen between now and sort of like early July of this year. And then I think sort of the next decent correction, and that maybe is a 15 to 30% correction, I don't know, will be in August. Between late July and late August, because what has Trump done essentially? And, as a trader, I love it when politicians put these binary outcomes because then it focuses all attention on these dates. And then I can almost certainly know that there's going to be something that's going to happen. And usually volatility in the first instance isn't great for what you own. So you want to be sort of de-risking. So what do we have in late July through, and I say the pivotal date here is a Jackson Hole symposium by the Fed, where I think they're going to radically change what they're doing. But so end of July is the first X date for 90-day tariffs for everyone except for China. So how many deals is Trump going to have announced? And if he hasn't announced a lot of deals, is he going to ratchet up the pressure on the tariffs to those who didn't come to the table? I think yes, because that's his negotiating style. He wants to get a little bit more juice to present to voters in 2026 about how amazing the Republican Party has done at this campaign promise of reducing the imbalances. So I think Trump goes a little bit more maximalist pressure into these dates, maybe even goes over them because he's like, okay, well, the markets are already up on the year, so I can afford to have things decelerate a bit if I go a little bit hardball on the tariffs after this 90-day extension. So I expect a lot of volatility. I think it's in middle of July, whenever that is the rest of the world. And then China is, I think, August 12th is when their extension expires. So again, a lot of volatility. Trump saying, no, we're not doing a deal unless it's very good for America, yada, yada, yada. The market's freaking out. Oh my God, they're not going to do a deal. And so we go back to sort of the April 2nd to, that week sort of volatility in the markets. And then we have the debt ceiling. So, assuming that there's no sort of bill passed to fund the government and the debt ceiling raised, that's essentially when the market is saying that the Treasury will run out of extraordinary measures to fund the government in the mid-August period. How do I come up with that date? You can look at the T-bill market and the term structure, the interest rate curve, and look at for kinks in the market because of how the rules are around money market funds and how they have to mark their books. They can't have a bond that doesn't get paid. It reduces, it might have their NAV go below 1, and that's sort of regulated as very, very bad. And so they don't want to own those bonds. They believe are going to could expire when the Treasury can't pay them back. Now, everyone believes that the Treasury the debt ceiling will ultimately get raised. So you're going to see a kink in the yield curve. And that's when you would say, okay, that's when the market says there's going to be the exit. And that's right now is around mid-August. So we have all these things happening around then. So I don't want to own a lot of risk from late July into the Jackson Hole symposium. And so then we get to Jackson Hole. What do we expect from the Fed? If markets are crashing because Trump is trying to get a little bit more juice out of these tariff negotiations, ultimately they'll go back to status quo. We know that's what's going to happen because they can't take the volatility. Then we get the setup for Powell to do supplemental leverage ratio exemptions. We set the stage for Powell to announce that he's ending quantitative tightening, but the receipts from maturing mortgage-backed securities will be buying treasuries. He's already said that they're thinking about that. So I think those two things could be on the table to be announced at Jackson Hole. And then we get just rip-roaring markets from then until the early first quarter of 2026.
But why? Like, is the treasury buybacks, does that have impact this quickly? Is that the catalyst here, or is there something else?
I think it's just FOMO, right? So, we hit the
Sentiment.
110, went depth of, oh my God, the bear market's over, da 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 da. We went down to 70 something thousand. And then, these people always Bitcoin's never going back above 110. That's it, right? So then it hits 110, then on high volume eclipses that. That means it's game on, right? And then we run. And it's not based on, any major new fundamental change. It's the same thing. Everyone believes they're going to print the money. And so then all the confirmatory biases start being, oh, the US government's going broke. Oh, they got downgraded. Oh, look at the deficit. Doge isn't working. Oh, this, oh, that. All these things that already happened that you could have bought Bitcoin at 74,000. Now it's, oh my God, that, the situation has just changed so dramatically. When there's no new information, it's just that the price changed. And so all those things that were positive in your mind get you to buy more Bitcoin at 110, 125, 150, right? And so we just run. And so that's the, this human psychology and how markets work is why I think that we run to those sorts of levels very, very quickly and then have a pause. I mean, obviously ETH had a good run, but it's still 25,000 at a level of Bitcoin. And then the Bitcoin ETH ratio is still not great. So, to really get all dominance going down, you really need ETH to rally. And so we'll see if that happens. But, I'm more focused on Bitcoin right now because that's what everyone owns. The people who are afraid of a bond market meltdown, who own a lot of bonds, the large institutions of the world, now they have this Bitcoin ETF and they can buy it. And they can express that fear in terms of buying Bitcoin. And if the price keeps rising, then it just confirms that, oh, shit, something's happening. It's not just going away. It's not just high beta NASDAQ, right? So, or it is high beta NASDAQ and it's crushing the NASDAQ this year. And guess what? I can join the train. I can join the party. And so that's why I think Bitcoin dominance probably either stays flat or increases if we don't go on this run. I think altcoins really come into the space sort of like later in the year once we get into the meat of the rally. No, I mean, recession is irrelevant. Who cares? Doesn't matter. We don't care about recessions. They don't matter. All I care about is money. How much money is there in the world? China is busy, dealing with a debt deflation trap, and they're not printing enough money to get themselves out of that by choice. And so even though the fiscal deficits are massive in China, it's just not enough to get things really, really going. So they're kind of out of the picture. We'll see what happens with Japan and what the BOJ does in June. I'm not sure. EU is irrelevant right now. And so it's really all, the show is, it's the Trump show. Think about, by the fall, it's almost 1 year out from midterm elections. And Trump needs to start showering goodies on the Republicans to get reelected. And so it is full send time for the economy to start going gangbusters. And what does that mean? You need to give credit. That is what the US economy is based on. It's credit. And so that is supplemental leverage ratio. That's treasury buybacks. That's ending the conservatorship of Fannie and Freddie. There's all these sorts of things that they can do to increase the credit into the system to start juicing at least financial markets to start with. And that's why I think the fall is when they really need to start getting going, because they only have 12 months. The Republican legislators need to start campaigning on what did you do for me lately, is what the voter is going to be asking. And so I think all this talk, all this doom and gloom, that's out the window. It's America's the best place in the world. Look at what we did in the first 100 days. I'm fucking amazing. We beat back China. They fucking bent the knee. We did the deals in the Middle East, all these sorts of things, right? Maybe there's a recession, maybe there's not. I don't really care. It doesn't matter. I just know the money needs to be printed. The markets need to go up because the party in power is getting reelected. In the same way that the Democrats did the same thing with, Fed cut rates for Kamala Harris. Unfortunately for them, she lost, but it's the same playbook at the end of the day. That playbook really starts in earnest in the fall. And so that's why I think that's when we get the real juicy, just like day after day of just green candles everywhere across the crypto ecosystem.
Welcome back to the Market Chronicles. This is episode 25, where we dive deep into the financial world to bring you the insights that matter. And hey, if you're watching us on YouTube, definitely hit that subscribe button so you don't miss any of our future analyses. Today, we're unpacking some recent thoughts from Arthur Hayes. Always interesting takes from him.
Definitely. He's got a pretty distinct view on where the economy and, of course, crypto might be heading.
Yeah, so our goal here is to pull out the really key takeaways from his latest commentary, the actionable stuff, without getting lost in the weeds.
Okay, let's dive in. So Hayes is painting this picture. He calls it full send for the U.S. economy. Basically, things are set to grow fast.
Full send, huh? And it sounds like credit is the main engine in his view.
Exactly. He argues it's all about credit availability and that we're likely going to see moves to, well, increase it.
And he gets specific, right? He mentions things like tweaking the supplemental leverage ratio for banks.
Yeah, that and potentially more treasury buybacks. Even brings up ending the Fannie and Freddie conservatorship, which would be huge.
Those are definitely big levers they can pull. Significant potential impact on liquidity there.
Totally. And what's striking is how he seems to almost brush off recession fears. It's like his focus is just laser sharp on money printing and markets going up.
It's very liquidity driven, less focused on traditional economic signals, maybe.
Precisely. And then he links it, interestingly, to politics.
Ah, the political angle. He draws a comparison, doesn't he? Suggesting the current administration might try to boost markets ahead of the midterms, like maybe happened before?
Yeah, he refers back to alleged actions around the 2020 election. His prediction is that this kind of playbook, juicing the markets for political timing, could ramp up this fall, about a year out from the midterms.
Well, that's certainly a perspective to consider. Timing market boosts around elections isn't exactly unheard of.
Plausible, certainly. Now, shifting gears slightly, what about crypto? He's got some bold calls there, too.
Oh, yeah. Big upward moves expected starting this fall, according to him.
He's talking specific Bitcoin targets. First, a push through $110,000.
Okay, 110K.
And then he sees a surge, maybe $150,000 to $200,000 range by early July.
Wow, that's ambitious for early July. But he doesn't see it as just straight up, does he? There's a correction expected.
Correct. He flags a potential pullback, maybe 15 to 30% sometime in August, late July to late August timeframe.
And he connects that to something specific, doesn't he? The tariffs.
Yes, exactly. He links that potential dip to the expiration dates for some of the tariffs put in place by the Trump administration.
So trade policy suddenly becomes a major crypto market factor in the near term.
Interesting. He sees Trump's tariff approach as creating volatility.
Right. Binary outcomes, he calls them. High stakes around these deadlines. He points to late July for some tariffs, mid-July for others, and then August 12th specifically for China.
Okay, so those are dates to watch. If deals aren't reached, expect more volatility, maybe markets heading down temporarily. That seems to be his thinking. And all this plays out with the debt ceiling still hanging in the background.
Ah, yes, the debt ceiling. Can't forget that. What's Hayes saying there?
He's watching that X date, when the Treasury might run out of runway with its extraordinary measures. He's eyeing mid-August, looking at signals from the short-term bond market.
Makes sense. Money market fans get nervous, holding bonds that might theoretically not get paid on time.
Understandably cautious, yeah. So late summer looks like a potential pressure point from multiple angles.
Okay, so after that potential August turbulence, what's next? You mentioned Jackson Hole.
Yeah, the big central banker meeting. He thinks that could be a turning point.
How so? What does he expect the Fed to do?
Well, his theory is if the markets do take a hit because of tariffs or debt ceiling worries, the Fed might use Jackson Hole to signal a change.
Like step back in.
Maybe. He suggests they could announce things like exemptions for that supplemental leverage ratio we mentioned earlier, or maybe signal an end to quantitative tightening, perhaps reinvesting maturing mortgage bonds into treasuries instead.
A Fed pivot, essentially, and the market reaction.
He predicts a rip-roaring rally starting from Jackson Hole, potentially lasting well into early 2026.
Quite the forecast. He also talked about market psychology, right?
Oh.
Especially with Bitcoin's recent run.
Yeah, he argues that the initial move, say, breaking $110G, wasn't really about some huge new fundamental shift.
More about FOMO, fear of missing out kicking back in.
Exactly. Price action driving sentiment. He makes the point that news people ignored when prices were lower suddenly becomes a reason to buy when things are moving up fast. It just reinforces the existing bias.
That's a classic market dynamic for sure. Price changes perception.
Yeah.
What about altcoins?
He sees them lagging a bit, like Bitcoin leads the charge first, maybe fueled partly by the ETFs letting bond market-focused institutions get exposure.
Okay, so alts play catch-up later.
That seems to be his view. He mentions watching the Bitcoin youth ratio, suggesting you'd need a strong Ethereum rally to really pull down Bitcoin dominance significantly.
Got it. And through all this, his view on a potential recession is...
irrelevant. Doesn't matter. That's pretty much his direct take.
Ignore it.
His focus is purely on the amount of money in the system globally. He briefly touches on China dealing with debt deflation, Japan maybe doing something in June, the EU being, well, irrelevant for now in his view. But the main driver is liquidity.
So it all comes back to the money flow.
Mhm.
And he frames a lot of this within a political narrative too, right? The Trump show idea.
Yeah, he kind of paints this picture where a lot hinges on the need for Republican success, potentially influencing policy to keep the economy looking positive, especially as we head towards those midterms.
Right, boosting the economy for political gain. That theme again.
It's a central thread in his analysis right now.
Okay, let's try to quickly pull this all together. Hayes is basically forecasting a big credit expansion, potentially politically motivated market support.
Uh-huh. Specific bullish Bitcoin targets, but with a likely correction around August linked to tariff deadlines and maybe the debt ceiling drama.
Right, and then a potential Fed pivot at Jackson Hole, setting off a major rally into 2026.
Exactly. It's this complex interplay he's describing. Policy, politics, market psychology, all driving things.
Fascinating stuff. Definitely gives you a lot to chew on. It really highlights how connected everything is, monetary policy, election cycles.
Yeah, and how those connections, as Hayes sees them, might shape things for you as an investor in the next few months.
Definitely food for thought.
Yeah.
As always, do your own research based on these ideas. Thanks for joining us for this deep dive into Arthur Hayes' latest thinking.